Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. I wanted to talk a little bit about some alternative investments, which would be assets which are anything other than stocks and bonds. The main reason you use alternative investments is because they behave differently than the stocks and bonds, and perhaps they don't crash when the stock market does. So let's look at a few possibilities. First one would be collectibles. So they could be classic cars. A 1968 Ford Mustang I looked up is now worth $69,000. Stamps, if you have a rare one, that could be worth quite a bit. Comic books, I think, have been a thing for the last 20 years. And we have baseball cards that, if they're in mint condition, they could be worth quite a bit of money. Art, always, you hear about auctions where a piece of art goes for millions of dollars. You could have Star Wars toys in original packaging, so as long as you didn't open it up and play with it, it could be worth quite a bit. And the caveat here is you really need to do your research and you need to know what you're getting, because if it's not something that's increasing in price, then it's not an investment. So these are good alternatives. I wouldn't make it half my portfolio, of course, but it's something to look into. Next big category is real estate, and I've done multiple videos on that. So I'll just at a high level describe 4 ways that you can profit off of real estate. So one, you can do something called wholesaling or bird dogging, which is when you have time but no money, and you basically find real estate investments for investors, and you get in touch with the owner, you get it under contract that you're going to purchase their property at a certain price, and then you reach out to your network of investors and you keep a certain percentage for yourself, and or you put in a higher price to the investor, and as long as it still makes sense to the investor, then you make the difference between what you promised to the owner and what the investor is going to pay you. So generally that involves going around the neighborhood, talking to people, handing out your business cards, and then 1 in 100 homeowners is going to phone you in 6 months and say, "Hey, I really want to sell my house." The next one, which is short time frame, but it does require a good credit and it requires some cash, is doing flips. So you purchase a home, you slap some lipstick on a pig, as the saying goes, you make some fixes, you take out a wall to open up the space, you take the moss off the roof, you put a little paint on the inside, on the outside, you remove the dated carpet, and you put in a nice hardwood floor, and then you sell it, hopefully at a significant increase in price. Obviously, if real estate is appreciating all on its own, it's just going to add extra profits for you. And it's really just a short term. You try to fix it and flip it in a couple of months. The next version is buy and hold, which I think is the classic, where you buy a property, you put a renter in, you make whatever fixes are needed to get the renter in, you look at the fixed cost versus how much that fix is going to increase the property price and the rent, and you make a decision whether you do it or not. And you put a renter in and you just keep collecting the rent. So the big thing here is you want to make sure there is positive cash flow, meaning you have to have money left over at the end of the year after all the expenses have been paid. If there is no positive cash flow, you're subsidizing a renter to be in your property. And while that's okay, perhaps if the prices are increasing of the real estate, it's not okay when the prices are flat or are going down. And there is a kind of a saying that if your rental property is not cash flowing, you are going to lose it sooner or later, because I kind of look at the real estate as a black box, and you want more money coming out than is going in. There's no problem if that's happening, of course, depending on how much you value your time that you have to put into it. But if it's costing you money, there's no problem if you're working. But remember, this is a long-term investment, and if you stop working, if you're going through a divorce and it's costing money, you're going to be looking for things to throw overboard when the ship is sinking, and if it's costing you money, that's going to be the first thing to go. So you're eventually going to lose it if it's not positively cash flowing. And number four is sort of a hybrid, and that's doing joint ventures. So you get together with other folks, each one contributing something to the project. So one could be a realtor, another one could be a construction contractor, and perhaps you're the one with the money. And therefore, you all go in equally. Uh, Perhaps you're contributing the down payment. Um, the realtor is doing their work without a commission. The contractor is making sure the place is fixed up, and that way you're able to, without having all of those skills, you're still able to get into real estate and do the transaction. So those are kind of four ways to make money in real estate. Obviously, there's far more to it, but real estate is a fairly low volatility investment, and so again, a good diversification from stocks and bonds. Next, we have private equity, and please do see previous videos that I've done on that as well. And private equity is basically lending money, or more likely investing money, to companies which don't want to go onto the stock exchange, but they do need money for whatever projects that they're running. It could be real estate related, and most of the time it seems to be, but it doesn't have to. And it's just a company that is looking for investors, and it's usually sold to you through a salesperson that has 30 of these companies on his or her shelf, and they will set you up with the ones that work for you. So for example, if you want cash flow, you would get a different subset of investments pitched to you than if you just want growth. Uh, some of these are, for example, self-storage places. I'm invested in a car wash. There's various versions of these things. And keep in mind, the minimums are usually $10,000, and uh, they could be as high as $25,000, and they're usually at least 2 years, and some of them have gone past five. Uh, some of them do kick off some cash flow in the meantime. Some promise to give you cash retroactively back to when you invested the money once they become liquid. So when the self-storage place is built, or the garage, the car wash is built, and so on, then they'll give you money retroactively once they refinance it. So uh, these are generally high risk investments, because there is relatively little disclosure. They don't really have to tell you anything, and the first sign of trouble is when the lawyers get involved, or when the money stops dropping into your checking account every month. So definitely buyer beware here, but again, it's an alternative. And because it's not liquid, like I said, it's 2 to 5 years, um, then there's very little volatility because you can't click on the sell button very easily. Next, alternative investments would be startups, where you get angel investors putting in money. These are super high risk. A lot of them go to zero and the money's just gone. And so the angel investors, they're obviously not doing it out of the goodness of their heart. And they will take a large share of ownership and control. Uh, I would do this only in an area where I have significant knowledge. And I haven't done one of these, even though I've been approached multiple times. Another alternative investment is private debt and peer-to-peer lending. So this could either be facilitated through a website where you choose the uh, the people you're going to lend money to based on their credit scores and so on. Private debt or hard money lending. This is lending money usually for real estate or for construction of real estate. Usually at a very high rate, so generally double digits, and you get to go on title to have some security. With the peer-to-peer lending, it's generally unsecured, and there's a lot of fraud in those. So I would definitely make sure you diversify your investments for the peer-to-peer lending. Another alternative would be commodities. So gold, silver, oil. You can get into these through exchange traded funds, or you can get physical gold coins and things like that, or silver bars. Obviously, you don't want a barrel of oil sitting in your closet. Uh, Commodities do well during inflation, but some people choose to approach this by investing in commodity producers instead. And those aren't my favorite because commodity producers are price takers. They don't have a unique service or product that they can market on its virtues. They're getting the same price as their competitors for these very generic products or whatever they are. So it is an alternative, uh, one again that is somewhat cyclical, and you need to be aware of what you're getting into. And the last one I'm going to talk to is foreign exchange in currency. So, for example, you have Canadian dollars and you're thinking that the US dollar is going to appreciate. So, you buy some US dollars. If you're correct, they appreciate. And then when you buy Canadian dollars back, you get more Canadian dollars than that you used initially. Uh, there is actual foreign exchange trading where traders do that on a daily basis, and they usually use a lot of leverage. There's a lot of borrowing, so they put in cash, and then they're able to multiply the movements of the currencies by a factor of 20 or 50 or even more. It's not something that I have experience with. I'm just saying that you're going to get a very different result than you would get with stocks or bonds because these assets just behave differently. So these have been some alternative assets to stocks and bonds that I wanted to share with you. I would definitely suggest you do significant amounts of research before getting into any of these. Some require little money to get in, some require more money to get in, such as real estate. So make sure you do your research prior to making any investments. And also, if you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.